very much for joining us here. This is the first session in the exhibitors stage, and so delighted to be hosting that on behalf of Real Asset Media. For those who don't know me, my name's Richard Betts. I'm the co-founder of Real Asset Media, and we focus less on the day-to-day deal news, although we do cover that, but our focus is really on insight, on research, on data, and really driving investment. So this one is looking particularly at the trends here in terms of, I guess, the occupier trends, but also the investor trends and what that means in terms of the logistics side. In case you don't know, we produce EXPO Day, which should be there for you. And if you're lucky enough to have a copy of Insight in front of you, there's a great deal on logistics in that one, so do look through those. First of all, we're going to have a brief introductory presentation from René Buck. For those who don't know René, René won't say it himself, but he is a leading global expert in this area. He's just going to give us a kind of 7-minute roll through what he's seeing at the moment, and then we've got a super panel to pick that up. So what we can do, because we're all here, it's the first session we're doing, is to warm ourselves up. We're just going to give René and ourselves some applause for being here at 10 a.m. Welcome, René.
And luckily enough, also no drone interference, right? So thank you very much, everybody, for being here this morning. A brief introduction, particularly from the occupier perspective, because that's what we all need in this difficult market is occupiers, tenants who want to set up logistics centers or go to a third-party logistics service provider to get their stuff done. As mentioned by Richard, my name is René Buck. I'm founder and CEO of BCI Global, Buck Consultants International. It's already there for 40 years. And we work for a variety of different players, from real estate, developers and investors, authorities. But our prime bread and butter is working for occupiers worldwide. We have offices not only here in Europe, but 3 offices in the US and 4 in Asia to help them. And actually, we are very proud that Forbes magazine makes every year an annual overview of the world's best management consulting companies. And 2 weeks ago, they shared that for the 4th year in a row, we are on that list. These are the kind of companies we work for. Companies who, in these days, are looking for, is our manufacturing footprint the right one? Is our distribution footprint as we should know it? Are we really customer-centric and an agile supply chain organized? So in our work, it's not only about real estate, it's really about what is the strategy you really need as a company in these days. And the flip side of that is that with the knowledge we have from our occupiers, with all our teams around the world, that we can also help developers and investors with their strategy, with their concepts, with the way how they can be successful in this market. Now, if you talk about risk, we talk a lot about risk, but let's take what is the risk at a corporate if you have a medical devices company or you are in the automotive industry? There are 3 different drivers you have to deal with. One is the internal drivers, company specific, the CEO is in control, and it's about new products, it's about new production capacity being planned, it's about mergers and acquisition, and that's what a company can control itself. You have also industry drivers. Think about sustainability, regulatory changes, new manufacturing technologies. So if a CEO of a medtech company has to deal with that, it's also all his peers, colleagues, competitors who have to deal with those developments as well. And the third category is actually the category which I know that from 40 years in my career, in the last 10, 15 years has become more important. External developments. And you can see on that red arrow, the influence of the sea level is pretty low. So we are talking about hyperinflation. Obviously, we talk about natural disasters, think about COVID. We talk about geopolitical development and also tariffs. And these tariffs have a tremendous influence in 2025 on the economy all over the world. And a lot of economists say that, yeah, but you know, if you look to German exports in a whole, then the US is only a small share. But what we have seen is that the uncertainty within tenants and occupiers has really come to a high level. Now, trade tariffs, which Trump imposed, we have already trade tariffs for decades. But there were all ways to provide an equal economic level playing field. That was the objective of trade tariffs. And what we have seen now, and you can see that in the red arrows, due to President Trump, we have all different types of considerations which come into the play of tariffs. Now, when on January 20th, President Trump was inaugurated, he immediately put a 25% tariff on Mexico, not because he blamed Mexican companies, but he blamed the Mexican government for being too relaxed in immigration. The same with Canada on fentanyl. It was not Canadian companies. So what we see is that strategic considerations, military consideration, national security considerations coming into the play, which makes it even for every company more unpredictable. Now then the question is this only Trump? If we have a new president, is it over? The answer is no. If you look here on the right-hand side, you can see in that red arrow, that's the trade measures taken by countries or trade blocs, think about the European Union, to limit trade, to make it more difficult, to put quota, tariffs, etc. And you can see that it's already for 10 years a straight line up. If we look to the measures taken every year by countries or trade blocs to liberalize trade, to make life easier, you see that's a relatively flat green line. So this phenomena of geo-economic fragmentation is here to stay. Now, this is the current situation on the trade tariffs. We all know that, with the EU at 50%, which we all thought was too high. But then when Switzerland was imposed with 39, we thought that's not a bad deal. And what you see now is in the US, and it is actually next week, Tuesday, is an interesting day, because there was a court in the US who has said everything what has been done this year on tariffs is illegal. That's the US Court of Appeal for the Federal Circuit. And they say because Trump calls in an emergency act and trade tariffs would not be part of that. So the court said till October 14, next week Tuesday, we keep it as it is. And then we are in limbo because nobody knows what then the next step is. We will have in November hearings at the US Supreme Court, and then perhaps before Christmas the decision. So all in all, we have nearly a whole year where nobody knows what really the situation will be. But think about that lineup, that geo-economic fragmentation, which companies answer by looking into regionalization of their value chain. So if you, from a business strategy point of view, where are occupiers, tenants now looking for? It's that dealing with that geopolitical instability. Think about China, Taiwan, think about Ukraine. There are various of these spots in the world. Trade tariffs, economic growth, which is uncertain because the unpredictability of the economic environment is increasing. And what you also see, and that's interesting, I think also for logistics, is there is a reorganization of footprints at a global level. We see that companies want to get rid of those disruptions in Asia, want to be closer to customers. So we see decentralization, regionalization of production. Sometimes it's called offshoring, sometimes it's called nearshoring. But it's more like region for region production to be sure that you can deliver your clients. That's on a global level. What we also see is that within Europe, companies are changing their distribution models. So there were industries like medical devices and pharma who had one large distribution center in Europe covering the whole world. And we see that that is changing. So they are looking for regionalization within Europe. So instead of having one central distribution center, 3 or 4 regional ones or hybrid ones. So it's on a global level that the position of Europe is changing, but also within Europe, the differences are there as well. Now, for occupiers tenants, we see that although vacancy levels are up, that in the logistics hotspots where everybody wants to be, that supply can still be moderate if you are looking for modern, sustainable, energy-efficient buildings. And certainly with the economic uncertainty, everybody is looking for the low cost as well. We still have to deal in various European countries with the lack of workforce and high attrition rates. So with migrant problems, with being sure that you have the workers. And what we see is then the answer would be to a part robotization and automation, but you need the capex, you need the money for that. And you see that at the sea level, there's hesitation to do that if you have only limited duration of contracts. So there are a number of challenges on the corporate side, which will have an influence on the way how companies look into setting up logistics or optimizing their logistics real estate in Europe. So last slide, short term, the demand is relatively low all over Europe, some exceptions, and that will stay for at least, I think, the next 12 to 18 months. In the midterm, the potentials, the fundamentals behind logistics real estate are great. The title of this session is, you know, from how has logistics real estate asset class evolved? And it has become in the last 15 years a real asset class. And we see also some demand drivers. That changing supply chain, so if companies say we have more distribution and assembly in Europe, that's a demand driver. If companies are changing from one distribution center in Belgium or in the Netherlands to 3 in Europe, that's a demand driver. It's also finding the right buildings, also because some of the buildings are just obsolete and you have to find a solution for that. There are also some new industries where, and defense is obviously a good one, where we see that there will be a growth in industrial place, in logistics, and that's economy independent. So it's a driver which we all agreed upon in Europe, in NATO, so that means that there is a demand for that as well. And we think that in certain parts, e-commerce will also grow to the COVID levels again. So after COVID, which was a straight line up, that we had a dip, but now the e-commerce is still growing, certainly if you think about fresh products. So we think that the fundamentals for logistics real estate are still good, but that you also have to be aware of the differences within regions, in vacancy, in take-up levels, in yields. So you cannot talk about national markets, you have to go even to regional or metro level, and sometimes in that metro level also to even a more granular approach. And with that, I give the floor back to Richard, and hope that this is also spurring the discussion with the panel. There you go.
Thank you, René. Great. Yes, speakers, if you could join us up here. I will move to here so that we can get everybody on the stage, which would be great. Really interesting, René. Lots to pick up on there, I think. Just in terms of elements like, you know, where you're beginning to see changes in the demand drivers, whether that's because of tariffs, because of nearshoring, the element of defense, of course, all of those elements coming in. Let's start just with brief introductions. So let's start at this end, and let's just do 30 seconds each, and I know that's difficult, but 30 seconds on who you are and what you do. We won't have time to do everybody in the audience, but we'll start with the panel.
Okay.
That will work, yeah.
Perfect. Thank you, Richard. Great being here. So my name is Pascal. I'm from Drees and Sommer. Drees and Sommer is a technical advisor, mainly focused at the moment in Europe, some international markets like China, and now also entering the American market, which we just talked about. And my personal focus is on real estate clients which focus in logistics, so investors, developers, and this this group I'm consulting to.
Great. Brad.
I'm Brad Gries. I'm with LaSalle Investment Management. LaSalle is a global real estate-only investment manager, roughly 90 billion of assets under management globally. I lead the Americas region for LaSalle, and across the Americas, but also globally, we invest up and down the risk spectrum for equity as well as credit, and across sectors, including logistics.
Great. Sally.
Hi, I'm Sally Bruer. I'm the head of EMEA Logistics and Industrial Research at Cushman and Wakefield. And we consult and advise clients across the spectrum, from occupiers, developers, investors, landlords, and asset managers. I personally have worked in logistics and industrial for almost my entire career in property as a sector specialist, before it got sexy, everyone. As a particular area of interest, working across Europe and globally with our research and market-facing colleagues to bring the best insight and understanding.
Great. Nico.
Hello, my name is Nicolai Soltau. I'm head of fund management and portfolio management at GARBE. GARBE is a development since over 60 years. We are developing several asset classes. Mainly, everybody knows us due to the fact that we are well placed in logistics. So I'm heading the logistic asset class mainly across Europe in 12 countries.
Great, and there's also, if anybody hasn't seen it, then GARBE also do a logistics research, which is twice a year, which is called the GARBE Pyramid. So if you don't know that, drop a note to Nico afterwards, because there's some really interesting things, and we'll pick that up a little bit. If anybody's got a question, please do raise your hand. Somehow let me know that you've got a question, and we will also come to you. So if you've got a point, do come up with it. Let's just pick up, and anybody can pick this up. Where do we think we are if we look back 12 months? What's changed? What's different? Obviously the tariffs, but what things are we seeing different from EXPO last year in terms of the sector?
No, I think the uncertainty element has heightened, and we know this, and we know that it's affecting occupiers. We know that it's making a difference to their decision-making process. We survey our brokers every quarter, and we ask them questions around how long, do we see deals lengthening? Do we see deals being stopped? And that has grown marginally, but has grown over the last couple of quarters. So we are seeing that challenge for the occupiers. So we're seeing that extended period of deal making is lengthening. I'd also say that we have those new sources of demand coming through, and we're starting to see that materialise quite markedly, which is bolstering to the industry. I'd also say that one of the things we should be asking ourselves, Richard, is what hasn't changed. And we're still seeing plenty of conviction for the sector from the investment side. We're seeing the emergence. So what has changed is we're seeing the re-emergence of core capital and core plus capital, coming back to the market, starting to look at and across the spectrum, continuing to see the asset class as a mid to long-term play. Maybe there is certainly some challenge in the short term around uncertainty for the occupational market. A slowdown in rents, which we can talk about later, but the conviction is still there, and for good reason. There is a very good reason that we require logistics and industrial assets, and those longer-term trends are going to continue to push the market to need that space, and therefore the investment proposition.
Yeah, and I think it's interesting the point as well when we're talking about the evolution of it, that you're now seeing logistics obviously as part of critical infrastructure in a way, and the defence element of that is just going to push that even harder, I think. Brad, it'd be interesting just to pick up from you what you're seeing from the US. Do the occupier perspectives match with what René is seeing? And I guess also that point, if you could pick that up about, are the tariffs going to drop out at any point? Is there something else that we're missing here? How do you see it?
Yeah, I do think that what René characterized from the European market is pretty similar across the U.S. market in terms of the drivers of demand. You still have e-commerce growing at a 8% clip. It's down from double digits, but there's still demand from e-commerce. We're seeing a lot of nearshoring or onshoring in the U.S., a lot of demand from advanced manufacturing uses across different markets in the U.S., a lot in the Sun Belt. And then we're still seeing a lot of demand from occupiers that are shifting their supply chain, shifting their models, and that's sort of a constant thing as a lot of occupiers sort of rethink their model, but there's demand coming from that, particularly for, I would say, more infill locations in high population or high population growth markets. Where we're seeing the most softness is in some of the larger markets, largely bulk space on the periphery of those markets where you had a lot of supply ramp up and demand has cooled a little bit. Tariffs are definitely impacting certain markets, primarily port-driven markets, largely more so on the West Coast than the East Coast. So the LA market has softened quite a bit from a demand standpoint, and they had a lot of supply that was infused into that market that's finally tapering off. So it has impacted fundamentals quite a bit, but market by market specific. As far as the tariffs coming off, I don't necessarily see it happening. I know there's some the court cases that René mentioned, but I'm not so certain that if this weren't just being driven by the executive branch of the government, that it had gone through what some view as the proper channels of congressional approval, that we wouldn't be in the same place. So regardless of how the court cases work out or the midterm elections next year, my sense is that there's support for some level of the tariffs, maybe not for the tactics that the administration has taken to achieve the tariff levels.
Okay, so interesting. So there was a bit of a view in Europe that actually that might change if Trump loses the midterm, but that sounds as though that's just a misunderstanding from Europe, really.
Yeah, well, Trump's not up for re-election in the midterms. It's just primarily congressional elections. And so there might be a flip in terms of control of Congress, but I'm not so certain that's going to change the direction on tariffs.
Okay, good. I'm going to come to you in a second, Pascal. But Nico, I just wanted to pick up with you. If we're looking at the investment trends, do they match with what we're seeing from René there in the presentation, the occupier trends? I mean, is that changing how you're seeing the investment side as well?
I would say no.
Okay.
But let's explain it a little bit. So in terms of the investments, or let's say what investors are currently looking for, sure they would at this stage are well more focused on a stable cash flow, and not just on the short term, really on the long term. So that means in the end, what kind of quality do we have to deliver within the property? Whether it's ESG driven, yes, check, that's already known. But I guess it's more than just ESG, it's just more than just this shed. We have to prepare the building more in a tech-ready situation so that automation is able, depending on the needs of the occupier, whether they want to invest or not. And if you look on the other side to the occupiers itself, then it's quite similar. So they would love to have still the flexibility. They want to have the ESG credentials as well and grid power. And but what is needed in the end is capacity from workers on the one hand side, and for the investors it's still the situation. Okay, where are the key markets? Where are the markets where we see good potentials, which will fit for the occupier, which will fit for the investors in terms of rental growth. So and that's a tricky thing to find. But I come back later on that one.
Okay, good. Pascal, I saw that you were agreeing with the idea of there being more capital coming in that Sally mentioned there. I suppose, what are you seeing? What types of capital? What are the opportunities they're looking for? Particularly in Europe, what are we seeing North American capital? Are we seeing Asian capital? Who's coming?
So yeah, there was an interesting point. So what I think we're seeing is technically we see two types of movements. What we see. So as logistics has established itself as a sophisticated asset class, as we talked about, we have tons of new market entries from investors from other asset classes. So they have the issue that the more established asset classes, where they are focused on in the earlier years, that they have kind of a performance issue, and that these investors are now like urging to find access to the logistic market. So I see that is one very big stream, what we see at the moment on the market. And these investors, I think they're more, what we see as a technical advisor, not as a research institute, is that they're more focusing on core products. So it's something not too risky, something they can live with in their asset management, they can work with in the FM, maybe some even close to the original assets they were already used to, so maybe more urban logistics, more like that things. So that is the one very big way, I think, what we are seeing. And then on the other side, you have, of course, the more established players in the market, like GARBE and some like other really big players in the market. And what I see is then that they are focusing on different areas of the market, not any longer the core products, but more going into transformation. So they're screening through their existing portfolios and seeing are there potentials to add value, to do transformation, maybe a good location available, but a not so good concept on it, and we're seeing that at the moment.
And just to pick up the point maybe with you, Brad or Sally, because Brad, obviously you're head of Americas, so logistics is one of the areas that you're looking at. But is it the same as in Europe, really, where it's at the moment it's residential and logistics, the two favoured ones? Is that the same? I know, Sally, you've got now a retail hat as well. So just how do we see it within the context of the other sectors?
Yeah, I would say that residential and logistics are still, probably the top two allocations of capital investment into the U.S., but it's not just traditional residential, sort of conventional multifamily or conventional large box logistics. What we're seeing in both cases is a lot of sort of subsectors or specialty sectors within them. So on the residential side, you're talking about senior housing, manufactured housing, affordable housing, single-family rentals, sort of bridging out, all of which have different fundamentals and different demand drivers. And so I think investors are looking for more diversification within the broader living or residential sector. And the same thing's happening in industrial, although there's a broader phenomenon in terms of industrial allocations where a lot of investors were heavily allocated in the latter half of the 2010s, allocating more capital to it. At the same time, you saw significant appreciation up until April of 2022. We're seeing significant appreciation. So their allocations within the sector are kind of where they need to be. So new allocations for the sector aren't quite as high on a relative basis as where they were. And I think similar to residential, where the allocations are going within that space are into more niche type segments of it, like outdoor storage or small bay infill urban logistics, as opposed to large box peripheral of the market type of investments.
And how does that compare to here? And just to remind you, you're all being incredibly polite, and I'm asking you a question, and then you're answering it, and nobody else is coming in. So we really haven't got time for that. There's only 20 minutes left. So when I ask a question, anybody else should feel permission to come in and say something. So I'm going to use Sally, but I'm also looking for anybody else to come in. Sally.
It's coming, don't worry. I think, just to pick up on the point that Brad made, which is that, go back to your other point, Richard, which is that we are seeing, I also, having been a sector specialist in logistics and industrial, I now also look at retail, which for a long time was a very challenging asset class to talk about. But we've seen the the capital allocation to retail really growing in the past 12 months. And we are seeing transactions multiply and also increase in size, the amount of capital that's being deployed into retail. And the reasons for that are that we have accretive debt, a really attractive debt environment with retail. There's a yield arbitrage play, but it is also for those, it's selective around the assets where there is a real opportunity. So it's not every asset. To be fair, there is market for every asset. It's about the right price, and it's about the correctly priced assets for the right kind of capital. So we are really seeing a resurgence in retail. But in terms of capital raising, the funds raised last year and this year, the largest pool of capital has been in still logistics and industrial. That may start to have some rivals coming into 2026, but we are still seeing lots of capital targeting the asset class. It is still, and I think this is the key word, it is selective. There is capital available, there is capital and lending available for all sorts of different types of asset play, but it has to be selective for the right complexion of capital. We're seeing still that selectiveness around single jurisdiction, be it a single asset, of course, but if it's portfolios, we're seeing a growth in the appetite for larger portfolios, 100, 200 million euros, and perhaps bigger in some jurisdictions, but it is still very much a single jurisdiction or a single asset type deployment. And that's for knowability, and investors having that opportunity to be able to truly get under the skin and really know what they need to do to those assets or know what they need to be aware of. That's a lot harder in a big mixed portfolio that perhaps we were seeing 5 years ago and before. Now, still very much selective capital deployment is still very much the watchword.
Let me just pick up on that real quick on the retail front. We're seeing a very similar phenomenon in the U.S. What happened in the U.S. Was, coming out of the global financial crisis, a tremendous amount of supply was added to the market. Demand was soft, and the market got quite soft. Well, we've seen effectively no supply for over a decade. retail demand from retailers on the occupier side has been relatively steady. So the market's gone from double-digit vacancy to sub 5% vacancy. The leverage has shifted. The tenant leverage was tremendous throughout that period, and now it's shifted a little bit back to the landlord. And I think investors are recognizing that, and that's why they're coming in. And we've got the same phenomenons relative to the yield play, accretive leverage, and that are in the U.S. market. So there's definitely been more pickup on the retail side in the U.S. as well.
And retail obviously boosts logistics as well. So.
Yeah, I just want to underpin a little bit. I mean, when we remember 22 was peak, and I mean, over the last 2-3 years, there were not that many, let's say it this way, investments in the sector. But everybody still know the successful story of the years 20 to 22. Okay, yes, we are sure these will not happen again in that sense. But I mean, the good memory is still there. So at this stage, a lot of investors do not want to let the train going out of the station without being on board. So that's why a lot of investors are currently prepared, or within our conversation of capital raising, some still, and I do agree with you a lot, still have the problems that they are invested in asset class where not easily getting out at the moment. But others are making use of the momentum and try to catch the capital they have, whether it's the core capital or whether it's the value-add capital, which is then more driven for the brown to green strategy, which we are also doing within our company. And that's some of the successful momentum for a lot of investors. And that's why we believe that the capital is slowly but surely coming back, and maybe a little bit faster than maybe others are thinking.
Yes, and maybe also to add on this side. So what I think we see in the market also is that a lot of investors are getting ready to pick up in the market again, to be active in the market again. And just if we have a look at the very, very big investors and see what they are doing is, they are trying to get a pipeline of opportunities over a development let's say platform. So what they're doing is they're not engaging already existing platform, but they may be buying a platform, or they are founding a platform or building up internal structures. So if you just look a bit in the past, we had, I don't know, AXA buying Baytree, we had Ares this year buying GLP, we had BlackRock buying or like founding, I think, Proxity, and PGIM with Omnidoc. So what they're all doing is they're trying to find a way to have a pipeline of opportunities in the very soon future, because I'm sure if they would not believe in the asset class and that it picks up, they would not get ready in such a way, and they could be just buying on the market, but they see that the market might be too competitive at the moment, the sheer buying market. So what they're doing is they're finding a way, an alternative way to access this. And what I'm really interested in seeing is what happens to the smaller investors in the next couple of years, and I think that might be something we will talk about in the next year. It's about all the small market entries and how smaller, like more fragmented, and the sub-markets the market has developed until then.
It'd be interesting to pick up a little bit. Sally, you mentioned earlier some of the demand drivers changing. You mentioned them as well, René, in yours. Let's just pick up with you first, René, and then I'll come to anybody. And René, you've got your own microphone, so that's fine. There's defence, but there's also battery technology. There's clean tech. There's those elements. How much are those going to be drivers in the future, do you think?
I think there are. I think we have to follow the supply chain trends within companies. So if companies are bringing production capacity back to Europe, that means also distribution activities. We have these changing distribution models, and then we have a number of sectors of industry which are growing. Defense is obviously a good one, and it's also because it's guaranteed for the number of years. That's interesting. If you're in the automotive industry, you follow the economic cycle, and if you are a supplier or warehousing in the automotive industry, you just follow the cycle. I think defense is a good one. I think that life sciences will also be one, because also we didn't talk yet about strategic autonomy. That's what the European Commission calls to save Europe, and what America would say, Trump would say America first. The European Commission doesn't say Europe first, but we say strategic autonomy, but it's more or less the same. And we will see that, for example, in active product ingredients for pharmaceutical industry that we want to have them back. Renewable energies is a little bit more difficult because I think that that the whole electric vehicle industry is quite in turmoil. However, we also see in some European countries that the stimulus measures that people buy electric vehicles are a little bit back. And what we also see is that it's tremendously difficult to make batteries. We saw that with the bankruptcy of Northvolt. So on the renewable energy side, that is coming. I don't know whether we will reach all these milestones which are being set by governments and politicians, but I think at a lower pace than we all thought 2 years ago.
I think that there is, I agree largely with René. I think there is some, we think about the cyclicality and we think about the demand drivers and we think about the order books for the businesses in order to be able to invest. There is also the support, that government side, that those targets that are being set, things like defence procurement. So not just the amount of spending that's coming through from the increasing the targets, the NATO targets, the individual country increases in terms of defensive spending, but also the procurement targets that the EU in particular is placing upon that order book. So by 2030, 50% of purchases, of procurement, of defensive spending needs to be done buying EU manufactured products. By 2035, that goes up to 60%. Current estimate by the EC itself is that it's currently at around 22%. So that as a driver of supply push, not just the demand push. We know the demand push is there. Whether or not that can be achieved, it's a legally binding target, but it needs to be able to be manifest. And in order to do that, we need real estate, we need people, we need connections, we need transport, we need all those things. Real estate is a fundamental part of that, but how to access that potential demand, because a lot of the growth is coming through in investment in existing buildings, existing owner-occupied buildings. Not all of it, but about half of it by our recent research, which I would encourage you all to read. But it's being able to unlock that and unlock those opportunities as investors, as developers, as asset managers, and looking at the way in which you can have those dialogues with your customers, with the tenants, new tenants, potential new tenants, and being able to find solutions, because it's some of it is new build assets, some of it is extensions to existing assets, some of it is repurposing of existing logistics and industrial buildings. I agree with René on life sciences. I think there may be in the short term some challenges around business uncertainty and the investment, not least because of the challenges for major manufacturing nations like Ireland, like Switzerland, to be able to rely on the US buying market and be able to move the product. And so that is, again, putting a dampener on business certainty around investment. So, do we wait? Do we pivot? Do we invest in the US? How long will this tone of America first prevail? Will we see a reversal out of this, or will we see a softening of position? So all of that, businesses, I've said it plenty of times in presentations, businesses abhor uncertainty, and until they have to act, until this certain uncertainty erodes, they delay. I would just mention on the EV battery side, yes, we do see some of that slowdown. I think one of the areas of particularly interesting growth will be in critical minerals and the focus on domestic sourcing. Again, the EU have set some pretty strong targets for domestic or European supply of critical minerals. And one of the things they're focusing on particular is recycling. And we're about to come to the end of the first generation of EV battery life, and those batteries have to be dealt with. So the opportunity for recycling of batteries to feed back into the gigafactories for the manufacture of EV without having to rely on external sources. China is one of the largest distributors, or one of the largest sources of critical minerals across from cobalt, nickel, rare earth minerals, you name it, copper. If Europe has a more reliable, localized source of these minerals, it all goes into the betterment of the reliability of product, and particularly in an environment of geopolitical uncertainty. So I think there is a real opportunity in this area as well.
But it will all depend, if I may say, it will all depend on the competitiveness of the European industries. And so defense, the objective is make as much as possible in Europe. But can we do that? Take drones. If you look into who's producing military drones, and probably not somebody now in Munich here at the moment, but if you take military drones, of the 25 largest military drones producers, there's only one European company. So the question is, can you pick up? It's the same with batteries. So the European competitiveness so you have the politicians say we should produce it here, and it's with pharma, it's with defense, that's great, but there's a premium to that just because our production costs in Europe are higher, and the question is, are we prepared to pay that premium?
Okay, good. There's 10 minutes left, so if anybody's got a question, I'm going to start from this side and work my way across. If anybody's got a question, now is the time to put your hand up, signal to me that you have one, and I'm quite good at spotting the room, and I've got all the way across, and so I'll carry on with mine. Now, but if you do have one, shout out, stand up, whatever is necessary. I just wanted to pick up on hotspots that we're seeing in Europe, whether or not we think it's more about drilling down into micro locations. How do we judge it? Has the investment rationale changed? What's driving that? Nico, maybe let's start with that, because I know within the GARBE pyramid, it picks up on some of those with the low fin score and those kind of elements.
Yeah, I think also what René and Sally said, also about the nearshoring, it's always a little bit about the question, where do we want to place this? So, and as GARBE is developing assets, we have to make sure that we are finding the right spot, obviously. So we do have the GARBE pyramid, and we do have our amenity low-fin score. So with this, we are trying to drill down in each and every region to build up a heat map for its specific customer. In the past, it was more driven, let's say, for the usual 3PL companies. But over the last term, we switched this because we saw that, yes, for sure, defense, unfortunately, I have to say, because this word was unfortunately not yet on this table. Unfortunately, we have to make use of defense. So we have to know what amenities are needed for defense. Same with life science. So trying to pick, because in the heat map we created, maybe those regions were red in the past, and maybe now they become more greener. So it might be a little bit more interesting for other customers now to enter those markets, which is then in the consequent maybe a good rationale for a core investor, because they would love to have a long-term vault with a good tenant. So I guess this is the way we are trying to analyze our European markets. And I guess what we see in general within the GARBE pyramid is, yes, sure, we still have our hotspots, whether it's Munich, Paris, Barcelona, or Warsaw. We do see that we have our rental growth expectations in those hotspots bigger than also in other regions. But what is definitely also clear is that we need to know more about the data. We need to know more about the regions, because if we are not ahead about this one, then we will lose the opportunity to find the right spot to make the nearshoring, maybe in Poland, Czech, also more happen than in the past.
Yep, go ahead.
Maybe just to add on that side, so what I think is what we're also seeing is a bigger fragmentation of the market. So what we have is that these, let's say, distribution centers, last mile centers, they're more following the global supply chains. And I think this is also what GARBE pyramid is focusing on. And I think what we're also experiencing is, as we have these new market entries and we have investors who are going into sub-markets like this urban logistic, we will have a lot of very regional markets, I think. So where one does not need to look for the global supply chain, but more for the economic growth or economic strength of this area. for example, to see if you can make these smaller parks, which are, I don't know, 1,000 to 3,000 square meters per unit, and then you have in total, I don't know, 20,000 square meters. Might not be interesting for all investors, especially the ones who look for very big assets, which they just need to have one tenant and it's all done. But for investors and real estate companies who are more also interested in doing the groundwork, like renting out the places, looking for the tenants, having a good asset management, I think that might be also a very interesting market in the upcoming years. And it might be interesting if GARBE is like adding this factor maybe in the pyramid in the future. Like,
I guess we did already.
yes?
There's about 4 minutes left, so in that time, I'd like to pick up on two things from everybody, really. One, which is for the good people here who might be looking at what the investment rationale is, where they should be investing, where should they be investing, what types of assets, where, what has the most, I guess, investment rationale in the current markets, and the key trends that we would like to be talking about next year. So what do we think we'll be talking about next year? René, let's start with you on either of those.
I think that from an investment point of view, it is important to understand what the supply chain drivers are behind the development of logistics real estate. So follow industry trends, because probably where the logistics hotspot will be for the defense industry are probably different than for life sciences. So if you follow and analyze the industry trends like we like to do, if people want to have the slides, come back to me, is really looking into the trends in the sectors of industry. And I think next year we will talk about, if we talk about nearshoring, why surprisingly Spain and Portugal and Turkey are running up and not Central and Eastern Europe.
Okay, interesting.
So let's come back on that next year.
Okay, good. 30 seconds each. Nico, your 30 seconds.
My 30 seconds. What I like to add, I guess, is the question about what are we talking about next year. I guess one, or let's say two topics. I guess energy power, grid power will be probably one of the new currencies we will see within the logistics. There are several markets where we have less capacity. Then second topic is probably everything around the AI and automation for product. I said about the tech-ready opportunity for assets, and I guess what will become more important is how do we get on with the old stock. So I guess the transition from more brown to green in that sense, that will become more important next year.
Great. 30 seconds, Sally.
In terms of asset types, I wouldn't reduce it to a single type of real estate, but instead reduce it back to the criticality of assets to the occupier, and really focus on those assets that are integral to businesses, to their operations, their supply chains, their manufacturing operations, things that they cannot do without. And these are the ones that, even if it requires transformation, these are opportunities for stickier tenants, for income growth, for value appreciation, all of these things that allow you the access to be able to ensure the tenancy retention, but value accretion. So that's what I would be thinking about always, not just this year, not just next year. But I do agree with some of those challenges that we do have coming down the pipeline, particularly to do with energy, but the great opportunity that presents as well. You know, we have an opportunity to be able to add materially to the transformation of the way in which we create and use energy and the way in which we create and use real estate.
Great. Brad?
I think from an investment standpoint, and it was touched on earlier, it's all about kind of the micro. It's very difficult to sort of assess the fundamentals at a national or a market level. You really need to get into that market in order to understand that location, that building type, and the fundamentals from a supply and demand standpoint for that type of investment that you're looking to make. And in order to do that, I think you need to have kind of the local boots on the ground and the research component and the data to help support the thesis. So that's how we approach it. That's how we've always approached it. So it's not about a certain building type. It's being flexible across building types and across market locations to target the ones that you think are going to outperform. And then looking forward to next year, I'm hoping there's a lot less talk about Trump and tariffs, and at least from a U.S. perspective, a lot more talk about the opportunity to invest in the market and the value of that market from a globally diversified portfolio standpoint.
Great. Finally, Pascal.
Okay, great. So from my point of view, we will, I mean, there were a lot of points I definitely agree to. I think energy, we will talk a lot about, like about energy hubs and maybe also AI. But maybe two things to add to is, first, we will probably experience way more new market entries, as well as on the investor side, developer side, real estate company sides, like service providers, etc. So the market will get, I think, more and more professionalized. It has already come in the past, but I think it will more and more proceed. And then last is because of the urge of the already established investors, now they are faced with the competition on the market, they will explore, I think, into new subcategory of the markets. And I think we will slowly start, it won't be a revolution, it will be evolution, but I think asset class or asset products, which are at the moment not accessible for a standard core or value add investor, like will slowly become more interesting because investors will explore these markets like terminals, like intermodal terminals or harbor structure, infrastructure. I think so slowly we will see the merge between infrastructure and logistics.
Okay, interesting. And possibly, of course, next year I might be replaced by an avatar. Who knows? You know, that may happen. If you're interested in sustainability and the energy side of that, and the transition, at 2 o'clock in Hall A1, stand 132, which is the International Investors Lounge, we've got a panel looking specifically at that area. And then tomorrow, if you want to focus on the investment topic for logistics, that's at 3 o'clock. In Hall A1, stand 132, International Investors Lounge, and the program's in the Expo Day, so you can pick it up from there. Thanks very much for joining us, everybody. Thanks very much to the speakers. Really fascinating and glad, and I hope that's kicked off Expo Real well for everybody. Thanks very much, everybody, for joining us. Thank you.